Afternoon, everyone. This is Trader Tim from eMiniMind.com. Today is the 23rd of April, 2018, and kicking off the week with a market analysis video. So let's take a look at the ES. You can see my daily chart here on the left, and I've got a high to low drawn using the fib retracement. That gives us a 27.13. Last week we traded at that, actually twice, touching it and selling off a little bit, and then the next day forming that spinning top. And then Thursday, Friday, and today getting a little bit of a sell-off from that level. We've got the 26.35 below us, but I think that, looking at these bottoming tails that we have, this prior box that we had is kind of acting as support now. It was resistance, the top of it, and now it's become support. So whether or not we come all the way down to 26.35s, we'll see. The rule of thumb is whichever setup trades first, in this case the short, that is in play. So we very well could come down and trade through, but we've got some bigger economic news announcements on the calendar this week. So look for those to maybe add some spice to the week and could pop us up higher. We really need to break 27.50s if we're going to break to the upside and get some momentum. Breaking the high of the swing high, 27.18s, is a start. But the full retracement short, that 27.52s, that's the 61.8, and that's really what needs to break if we're going to return to new highs, and not just that, but return to a little bit more good trading days. So what I mean by that is you've probably experienced a couple good days here and there in the last couple of weeks, but there's been a lot of challenging range-bound days that haven't really yielded a ton of quality setups. And so what I wanted to highlight today, for those of you that use the market profile, what the market profile is just a way to look at the markets broken down in 30-minute increments. So each 30 minutes gets a letter, and it begins at the NYSE open with the letter A. Then the next 30 minutes gets the letter B, and so on and so forth. And we end up at the end of the day with these bell curves, and they form different shapes. And more importantly, the opening range, that A and B period, forms in a relationship to the entire day. So, for instance, today would be classified as a normal day, and we have a pretty balanced profile, and we have a little bit of an extension to the downside, a little bit extension to the upside, but for the most part it's pretty balanced and overall kind of an even curve. Now, normal doesn't mean good. If we come up and just look at the last couple of days, Friday clearly a trend day, Thursday, Wednesday, both normal days. I classified those. Monday and Tuesday, normal variation days, and the difference there, a normal day typically has a opening range, that first hour's range, that the market spends a lot of time in. Look at where the market spent most of the day. It was within that first hour's range. And that's typically a very challenging day to be trading. There's not a big continuation. There's these little skirts outside of the opening range, but then we're kind of come right back into it. Notice how the open and the close is within that first hour's range. Now, if we compare that to Friday, that trend day, first hour's range, we immediately move outside of it, and most of the trade for the day is spent outside of the first hour's range. A normal variation day has a first hour's range. We don't necessarily trend in the same direction all day, but there's good trending throughout the day. And notice once again, most of the trade is spent outside of the first hour's range. And that's really the key. Days where we spend most of the day, if not all of it, inside of the first hour's range, those days tend to be much more challenging to trade. And so if you were to go back and look at your P&L from the last couple of weeks and just match it up with the different days, you probably notice that the days that I've got classified here as normal days, maybe you didn't do so well, or maybe you didn't have as many opportunities. And so when the market is opening on any given day, I always look for it to establish a range and then look to see if we're going to break out of that range. Are we forming any trends in the first hour? Are we just moving to the top of the range and then back to the bottom and then back up to the top? Or do we break out of it very quickly and don't return? And so the more you watch the markets, and more importantly, a specific market, you can start to pick up on some of those nuances that begin to form early in the day. And then as you familiarize yourself with the different types of days, then you can get a good sense early on. Okay, this is looking like we're going to go into a trend day. This is going to be a range-bound day, normal variation day, etc. And so I find Market Profile very helpful in that way. And I'm not using it to execute my trades, but I am using it to gauge the market sentiment and what we're likely to, where we're likely to head or not head for the day. Are we likely to get some continuation and break out, or just kind of stay in this tight range? So I've got that Excel spreadsheet of my market profile in the member dashboard. You can download that there. Tomorrow morning, we'll be doing a live trading session, as always we do on Tuesdays. You can check that out at eminymine.com/VIP. And on Thursday, I'll be doing another webinar/live trading session with Infinity Futures. And the link for that is at the eminymine.com homepage. You can tune in. We'll be talking about Heikin-Ashi candlesticks, tick charts, just kind of all the things that I use in my trading to capture big moves in the futures market. So I wish everyone a great week of trading, and we will talk to you very soon. Have a great week, everyone.